Yeah, this ongoing rally in the US stocks markets really makes me puzzling. So therefore, I will take you on my cycle screen. I will show you what I see. And then, if you like, let's have a discussion. That's it for today. We need to talk.
From the mind of Lars von Tienen, the most advanced cycle analysis, hot off the press.
Yeah, it's Cycles time again. Welcome to a new episode of Cycles TV. Yeah, the US stock markets. What can we say on that? I mean, I'm clueless, but let's ask our cycle screens what they might show us, what they tell us. I have also found some cycles which might be interesting, which could be more important moving into the future. But let me show you what I see, right? Let's start, as always, with a longer-term perspective, starting with the S&P 500 weekly perspective. You know that when we talk about long-term cycles, that we love the weekly 188 weekly cycle, which is found by Dewey, the 41-month cycle, which is prominent going back into 1920 and was even detected at that point in time. So that's quite obvious. It's quite the most dominant long-term cycle we can still find up to today. No discussion. But if we look at the current situation, this is what makes us puzzling, right? So, I mean, the theoretical point was up March this year. We talked about that. It looked pretty nice at that point in time here, but now we have this upswing here, which was expected anyhow to get kind of counter-trend move here to the upside. But this huge move to the upside is even something I have not expected here, or most of us have not expected, I will tell. Anyhow, I mean, we know cycles will not give us any information about the price targets here. So we should not wonder that cycles can't guide us here in terms of the timing, right? So therefore, we need to check some other important factors here. I mean, I'm not going into the past too much. You know the past performance of that cycle. What could be done, and this is something we can do within the platform, is we know that long-term cycles have a skew. I mean, yes, and maybe they are stretched, Ron, what you're telling in the chat section. So in financial markets, it is quite obvious that we don't have this stable synchron cycle from top to bottom, from bottom to top. It is skewed. So the time duration from the top to the next low is quite shorter than the amount of time it will take from the low to the next top in that cycle, while the cycle length stays the same. So it's just skewed in regards that the top and the bottom are not equal distance from. So the downswing phase is shorter, the upswing phase is longer, while the overall length of that cycle stays the same. So that's the so-called cycle skew. And this is nothing we can apply to curve fit it to the past. The cycle skew in financial markets is well observed and researched in different papers out there. So this is nothing special to our application. This is knowledge in the financial markets where that skew is quite obvious. So the time duration is shorter for downswings, while the upswing lasts longer, while the overall length of that cycle stays the same. So we can put this into practice in our cycles platform if we activate the cycle skew, which is a standard setting we can bring in here, see that cycle, and you now quite see from a visual perspective, and let me show you that, so that the time from top to bottom, here at that point, this one is shorter than the time from that bottom to the next top. So that's the skew, while the overall distance of that cycle, top to top or bottom to bottom, is still the same of that cycle, 188. So that's the so-called skew. And if we add that to our visualization, I think now it's time to get proven here. I mean, we don't have any much more time on that longer term cycle. So if we add that skew, okay, I mean, we are quite rolling over, but now it really gets time from that long-term perspective. So I think now it's a kind of make or break situation for that cycle. There's not much room into the future. But for that, I think it would still be valid if we would now turn down. But that's okay, the long-term perspective. So still valid. But time is running out to confirm this long-term cycle. Okay, I mean, that's known for a long time. Let's now jump to the shorter-term cycles for different US indices now. Let's start with the daily perspective on the Wilshire 5000, to start with a broader index first. So where are my notes? The notes are gone, so I need to do it without notes. But anyhow, so here is the Wilshire 5000. And if we look at the cycles and the spectrum at the bottom, we see two shorter term cycles here. 125 is okay. Those two are looking good from the perspective of stability. So those cycles have a very nice stability ranking, while not perfect from their visual shape here in that perspective. And then 246, no, that's quite too low here in regards. The stability score is much too low here. And then at the end, I will talk about that cycle for sure, the 340-day cycle with a high stability score. But let's go with the shorter first, which are those two here. And by the way, if you overlay them, it's quite interesting because it's kind of looking that this is just one cycle. If we pull in some more period, you will see that there's a time when they disable or cancel out each other. And then there's a time when they supplement each other, which then looks like it's just one cycle. But these are two cycles which looks like one cycle, but they are two cycles. So if just from a visual perspective, this would be one false cycle, also as Dewey calls them, because these are two cycles which visually show up as one cycle. So here, just using those two here on the Wilshire 5000, starting with the broader market here, time is now really at the edge, at the edge of that cycle here. So that's the first impression. From stability, we can see that it's quite nice in catching the major tops and bottoms in that cycle. And if you're new to cycle analysis, you are aware that we are looking for time alignments. So I will just show that on the screen here, just to show you what we are looking for. We are looking for timing at those points here. So here sideways, low, then here this kind of top into this low here, then here we have that top here to that low section here, the top. So that's the alignment of the points in time. So where we are now. So we have 1, 2, 3, for, I mean, here it's questionable about this period here, but the past 3 iterations of those cycles look quite perfect. We can even go longer into the past, but I will leave it for this now. So no price projections, but time-wise, yeah, we are at the window of opportunity for a possible turn. If you have a look at those cycles and the composite cycle, and if you would measure it, you would come to 180 days. And 180 days is a very important number. You should at least put it aside for a moment. I will get back to that number and the 340 and the 170. Maybe you realize something already there, but I will visit that cycle just in a second. Let's go to the Russell 2000. We have not made a new all-time high here, which is quite interesting, would confirm the longer-term cycle still in place. But here, looking at the shorter-term cycles, again, we have the 190. You might remember that was also the cycle we have just seen on the Wilshire 5000. So here it's, yeah, right at the top. So from the Russell 2000, just looking at this simple cycle here, we have topping condition here, and you, I mean, clearly see that this cycle has a very valid swing in the markets using the past data. You can also validate that with the cycle highlighter here at the bottom. So just zooming in, you see that we have a good fit between the real cyclic movement of the price series, which is the blue one, and the theoretical red cycle here. There's just one period where it was off here. All the other situations have been very, very spot on. So out of those 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 possible timing situations, just one was off. That's the reason we have seen that very high stability score at 190. So just using the 190 would give us here. We are not at the edge, we are arriving here right now. So adding our cyclic information, so the cyclic RSI would be a perfect fit. So just looking at the Russell, we would have quite perfect condition here for turning down quite soon. So let's do the same on the Nasdaq. So moving to the Nasdaq, here looking at the spectrum again, we have the 195 most prominent here. We don't see the 170, but we have the 126 and again 340, which I get back to in a second. So here, just looking at the 195, you see here quite arriving here. So still 1-2 weeks to go. I mean, here we have the previous top, then this rally into this position here. So this looks like maybe 1 or 2 weeks to go, but we are again, yeah, sitting at the edge here now, also rolling over that daily cycle. And now finally the Dow Jones. By the way, let's have a look at the CRSI here. So there's still some room. So this would confirm maybe there's, I don't know, a week to go from the technical situation. So from a technical perspective, the Nasdaq maybe has 1 or 2 weeks room to go. Dow Jones, here looking at the cycles, here we have the 170. You might remember it always alternates between 170 to 190. So here we have the 170. And again, 350 here, and then some shorter cycles, but let's start with those first. Here we are in that mid-August topping window, which we have passed now. So the Dow Jones is more or less ready. But I think you got the picture here. If you build now a kind of average between Wilshire 5000, Russell 2000, Nasdaq, you will see that those daily cycles around 170, 190 are all topping now or latest topping next week if we look at the Nasdaq index. Yeah, which, I mean, we have expected this already for August. So since July, those cycles signal a top, yeah, to be honest. So we are waiting for those cycles now to top, and they are kind of stretching more and more to the right. So we have a kind of right extension of those cycles. And looking from a weekly cycle, we are now really due, or there's something off with that analysis. And there's now one alternative scenario which I must bring to our attention, because I've now seen this coming in, which might alter the scenario which I have just shared a second ago. So you might have seen the cycle with a length of 340, 350. So therefore, let's have a look at that cycle. So we're going back to the Wilshire 5000 first, where we started. And I told you I will get back to these 340 cycle in a second. Before I activate that cycle, do you see already a kind of relation why that cycle might be from very interesting prominence here, not just because there's 340. There's a relation on the chart here, and we can bring that in if we activate that cycle harmonics tool we have here at the bottom. And if I just hover over the cycle with a length of 340, you see that this has an harmonic relation to the cycle with a length of 170. So there is now a new cycle showing up, which was not visible as such the previous weeks, which is an harmonic relation to one of the most prominent 170. So it's a kind of parent of that cycle. And therefore, it's not just the number in terms of length, it is an harmonic related cycle. So let's bring in the 170 first, and now activate the 340. And this gives us a kind of different picture, or let's have an individual view first of that 340 cycle, which needs more research. I would not, therefore, I'm not switching or alternating to that scenario right now. I still keep the cycles I'm mainly monitoring, which call for the high here, July, August now. So, but we cannot close our eyes because this is a new cycle showing up here with a very high stability. As said, I would need more data to confirm that before I switch to that cycle. Following that cycle, and that's then the other situation, this would extend the current upswing into end of this year, January next year, which would give the rally even more time. Or if we bring in this with the 170, so the harmonic related scenario, still calling maybe for a correction here. So this is not off the table here, so that we are waiting for a top here anyhow. Maybe this will not be a major top. Maybe we see a correction and then a move into January 2026. And then that might be the big top to come. That's something new, bringing that cycle into play. So that's quite interesting. So let's see on the Russell 2000. We talked about the 190. So here we also see the 355. So here the harmonic relation is not Well, it is. We have the numbers. If we give, okay, so let me explain you how the harmonic relation works. So here we have 190 is in a harmonic relation to 54, sorry, because this is a factor of 2, and we allow for 8% deviation. So, and it's in that range, while choosing a harmonic relation factor of 2, allowing 8% deviation in that, which will give 355 a valid harmonic relation, allowing 8% deviation to 190, which is, in this case, we again see that harmonic relation, right? So let's do the same procedure here. Let's activate. Oh, it won't allow me to do that. So now we are here. So first, maybe just using the same procedure here with the 355. It's showing here a possible top in January, bringing in the most prominent cycle right now. It's indicating here for the Russell possible topping in October. So that means still some time to go then down here. So that's interesting to see. So that's the 190-day cycle, which in isolation is due now, and then a shift here. But if we overlay that, and that's now important to have that in mind, this gives us a double top here, or we can even add a little bit more data. So let's extend that into the future. So here, those two cycles. Oops. So you see that? So this is not a key top here. So this is more extending the top a little bit into the future, but then more sideways move maybe into 2026 for the Russell here. By the way, that's due to the fact that the strength score is quite different here. The 190 days cycle has a higher strength than the longer term cycle. So that's why we see a little bit a different picture than on the Wilshire 5000, where we see here this huge top going forward here. But okay, that's the Russell. Let's go to the Nasdaq. And here, same story. Yeah, we have the 342. In that case, I think we will not see the harmonic relation. That's quite isolated here. So, but we know from our other charts that we often have the 170, which is not visible here at that point. The 190 also might be 350, 360. So we know that there might be a parent from other cycles here. And if we do that alternative scenario, we see here then this shifts a little bit the top into the future, which then is expected for mid-October. Yeah. So by the way, that would confirm also here that technical condition. So there's still some room to go before from the price, the technical condition from price, we see a signal here. And also here we still have a month to go from a timing perspective here. So that's the Nasdaq situation. And on the Dow Jones, I mean, you clearly see it, right? We have the same longer term cycle here, the 170. So here we have, again, our harmonic relation is coming into play. Yeah, so 173, 356, same story. Let's bring it in. And here we have, again, that picture which would call for still an interim top here. Still an interim top, so a correction into end of the year, and then maybe another upswing. So that's similar to what we've seen on the other charts. So that's I think that's now what we need to monitor closely. So let me try to summarize the story, or what I'm seeing on the cycles screens. The most dominant cycle is still the cycle with the length of 180. So you've seen between 170 and 190 days. Partially, you see both of those cycles. Those daily cycles are there for a long time. We follow them. They mainly called for a timing top in July, August. Yeah, depends a little bit on which data series you're looking to. So this has now been extended a little bit now today into September. So those cycles are really due. Now, bringing in the alternative scenario with the 340, 350 day cycle, which has an harmonic relation of 2 to the 170 or 190, the main story still stays the same. So even if we add that cycle into the mix, it's calling for an interim top right now, right around the corner. But it could mean that it's not the key top we're seeing here, that there might be an additional upswing after a short correction leading into early 2026. So, and that's kind of new also to me, because I've not seen that cycle before. And as I said, I still have not enough valid information on my table to fully switch to that 340, 360 day cycle. So I need to do some more research on the long-term perspective, going back more into the past to validate if that cycle is even visible in previous times and how the relation to the 170, 190 day cycle is. Yeah, that's it. Looking at the major US indices. So long story short, we are overdue for a time-wise correction, while the alternative scenario might just give us a correction into end of the year with another possible upswing. That's up to further research. Let's switch now to your questions in the chat section. So feel free to drop in your comments. I will now switch over and let's have a live dialogue. Ron, it looks like cycles are being stretched. Is there a way to find a longer cycle, even if it's only Ron, I think, you posted that question right at the start. So that's exactly what I wanted to show you with the 340-day cycle, that there is a longer cycle, an harmonic-related longer cycle, more and more coming into play. How dominant, how reliable that is, further research needs to be done. Swell chaser trading. It seems like timing these cycles diverge from price many times. Yes, and like RSI divergence, but eventual price rejoins the cycle. Yes, exactly. So this is what should happen now. One main reason while we see that cycles diverge is we only plot one or two dominant cycles on the screen. So we make a very simplistic picture of the real world. So that's we simplify everything in 1 or 2, 3 cycles. That divergence is quite a common thing because there are always even shorter cycles in play. We just have not paid any attention to those shorter cycles. If you would add those shorter cycles, the real top would come even more early or later than the theoretical top of the one cycle we are looking into. That's due to the fact that there are always shorter term cycles and they can impact price magnitude also by a large amount. And we don't know the price impact of shorter cycles. We just measure time. So therefore, shorter term cycles always are the reason or the root cause that in a view with just 1 or 2 cycles, they will diverge because shorter term cycles are phased out in the story we are talking about here. But second, even though they diverge from the visual shape, which is quite normal, they should return to their main shape or the most dominant cycle quite soon. So divergence is accepted. Yeah, that's not calling one cycle at that specific point. You would need to take into account all cycles which are valid. We're just looking for the one most dominant cycle. So yes, I'm now looking for that price should rejoin the weekly cycle. Swell chaser trading. So the weekly cycle is really overdue, even if we put the skew on. It's really time now that price rejoins that longer term cycle. That longer term cycle is there since 19 something. So that would be quite an very important situation if it not rejoins. And from a daily, I mean, we are at the edge. That's what I said. Since mid-July, beginning of August, I'm waiting for that timing situation right now. So, but I mean, time will tell. That analysis could be completely wrong. So let's see. But I hope at least I give you a kind of short answer. Gullybrex, are the weekly and daily cycles in sync for the downside? Or they're contradicting each other? No, they are now rolling to an in sync situation. So as said, the weekly has turned to the negative already, or since February this year. So as the daily cycles are now rolling over, at least the 170 and 190, we are now in sync to the downside. Just not the 340-day cycle. So there's one cycle which is contradicting that, which might now change the picture moving forward, but more time on that is required. Yes, you showed SPY timing cycle rolling over months ago, and yeah, that's exactly what I tried to say. I mean, it's the same for the Nasdaq. The cycles showed a topping period since mid-end of July. Yeah, that's exactly. This is what I've seen. So we're now in that right extension of those cycles. That's what I'm always saying. We are now at that really at the edge that price should rejoin that cycles. But we see that right translation just for a month right now. So yes, that's correct. So we are monitoring that topping cycle since mid-end July here. Dale, aren't right and left cycles caused by many exogenous factors, and we always use setups and triggers to trade? Yeah, for sure. Thank you for bringing that in. I mean, no one should just trade pure cycles. No one can trade time. Yeah, you can only trade price. So cycles are a time-based analysis. So to identify the price-based setups, you need to have additional analysis on your table to identify your individual setup, your trigger, to really enter a trade. What we are doing here is pure time analysis, which adds one dimension to your toolbox. And then on top, you need to analyze price, the classic technical analysis I assume you're all doing. And yes, those other factors like trend, like economic conditions, like noise or announcement from president somewhere might extend, trigger, or stretch, or left or right translate, or even an AI revenue bubble which might be out there. That's where you need to go to your price and analyze the price, Dale. So yes, and that's then always why price is not completely in sync with the theoretical cycle. So Dale, thank you for bringing that to the table. That this is also the reason why price is not exactly looking at as the dominant cycle. Yeah, Rashid, you are just something new. So just for the ones using that tool here, we have a new feature brought in for some pro users, which is now also showcasing exhaustion points on price. That's a price-based analysis, by the way. And if we activate those counts, you will see those price-based exhaustion points at the chart here. So they are quite standard, so nothing special, to be honest. They just measure points in price when it looks like the trend is exhausted in one direction, so to the upside or to the downside. So when that's the case, from measuring price over the previous bars, then it's showing that exhaustion symbol on price. So it gives you additional price-based information, and in combination with this cyclic RSI, we have two technical indicators in our platform, which helps you then to additionally show price-based signals to the time-based cycle. So that's just new and well spotted, Rashid. We just added this some days ago. No change to the crypto cycle. I think the past 2 weeks I updated you on the crypto cycles here, so nothing new, and it's still valid. Just view what we told about crypto and Bitcoin in specific in the past 2 episodes. Said that, I would call it another cycles episode. So I hope you got an idea of how the daily cycles look for the US indices, and that it's really shaking my head for 4-5 weeks now. We need to roll over. Chuck's well said. Thanks. See you next week. Same time, same place.